Hello everyone, this is today's video analysis for February 26, 2019. Today we're going to take a look at the EURUSD, the euro versus the US dollar for today's trade analysis. Looking here first on the daily time frame, of course, for a long period of time, we're going all the way back to October of 2018. This currency pair is mostly what we would call a range between the pink shaded area about the middle of the chart at 114.80 down to 114.50 and the orange shaded area at the bottom of the chart down towards 112.80, 112.60. So about a 200 pip range top to bottom of this black box. Now within there, we've seen the market rising and falling. We've seen uptrends, we've seen downtrends, all within that range since October of 2018. So we currently see the market bouncing back up, going from over the past 4 days or so, finding support at 113.35.10, but really coming from the orange zone at the bottom, 112.80.60, rising from there, breaking through the green zone, sitting on top of the green zone as support for the past 4 days, now rising into the blue zone. The blue zone, right near the middle of the range, 113.70, 13.95, holding as our resistance, not just today, 1, 2, 3, 4 days now, finding resistance underneath 113.70. And so we expect with some confidence that this is the area that we would be looking for our trading decisions. One of two things is going to happen here. Either we see the market hold here as resistance, as it has the last 4 days, and turn around and go back down towards the green zone, as it has for the past 4 days, or eventually we see the breakout above the blue zone and a continuation to the top of the range to the pink zone. How do we know all of that? How do we know that that's what's going to happen? That's what's happened back in time since October. Look at the black circle. I just want to point out a period of time that was quite long here in the black circle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days right there inside the black circle. Found resistance at the blue zone and went back down to the green and the orange zone. So that's somewhat of what we're thinking about today. Is as long as it's underneath that blue zone, there's a great potential, a great expectation of resistance. And only if it gets above it, as you see many times above the blue zone, do we expect to go to the pink zone. So I don't think buying very close to 113.70.95 is a fruitful opportunity or a high confidence opportunity. If you were going to buy, you'd want to do it back down here towards 113.35, which we did last week. Other thing we have going on here is the 100 period moving average. Interesting enough, zooms right here into the blue shaded area. Let's zoom it in a little bit here so we can see that better. There it is right there, blue shaded area. We have the 100 period moving average sitting there, the green wavy line. We also see this black trend line coming down here, and that becomes into play as well. This black trend line representing the period for much of 2019. We're talking about the top of that being January 10. So about the past month and a half or so, we've seen the market a good bit lower now than it was a month and a half ago. We did have a period of rising in the middle, but then turned and made a new low. So we see that rise here in the top with the black trend line coming into that area. So blue shaded area, we have the falling black trend line, we have historical resistance into that blue zone, we have the 100 period moving average. Now if we really want to add some more weight to this blue zone, we could probably find some Fibonacci there. Let's go from the high of the black trend line to the low of the red trend line with Fibonacci. We now see the 382 Fibonacci retracement level sitting at 1360, and that's just the bottom of the blue zone. 618 up here, by the way, closer to the pink zone. Let's take Fibonacci as well from this high right here in the middle down to the low, and doing that we now find the 618 fib of that range sitting here at 1407, just the top of our blue zone. 382 down here closer to the green zone. So we see some Fibonacci down near the green zone, some just above the blue zone, and some up at the pink zone. Looking at those last two legs of the downtrend. So very interesting stuff, but again, it comes down to this blue zone. One of two things. It's either going to bounce off of it and go back down, rally through it. We'll talk about the correlation to the US dollar as we did yesterday in the live trade room, and how we see the US dollar responding and how that influences and impacts the euro dollar. But it's all about this blue zone. Let's take it one time down to the 4-hour time frame real quick. As we get down here to the 4-hour time frame, doesn't really change much, does it? We see it holding resistance at the blue zone, support at the green zone, not a great place to buy it right now. It really isn't. As we have seen the past 4 days find resistance underneath 1370, so not a great place to go long and buy. The only reason I'm going to consider a long is that it finally gets above the blue shaded area. We see the candle, the market push above it, and then that increases our confidence then that we're going to look for it to go higher. If it doesn't do that, and we see some sort of infusion of sell orders, and I like to draw out these little boxes to as implied market movement. If we see a breakout above, as the blue box shows, or a sudden impact or infusion of sell orders like the red box implies, then we may look for it to go lower. So keeping an eye on the blue zone today. A break above it, we look for the market to go higher. Holding underneath it may give us an opportunity for short side for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.